Good evening. This is the Elliott Wave update for the S&P 500 for Monday, May 2nd, 2022. Another incredibly volatile day in the futures markets. And that is exactly what we try to get each day. The ability for the market to move strongly in both directions and to provide opportunity after opportunity after opportunity to trade. It was fantastic. In fact, let's take a quick look at the VIX. The volatility index, the cash index, closed at 32.34, which was down $1. The futures market, the VX, closed at 30.85, which was down about 97 cents. Both of these indexes were above 33 today during the day. And this was taking into consideration, both we had strong up moves, strong down moves, strong in-between moves. Everything just kind of flipped and flew and went in all directions. There was a lot of activity in the market, a lot of it based on whether the S&P would hold that 4,100 level. Now, I'm still trying to figure out who or what came up with that 4,100 was major support. Because what happens is you say it enough, people believe it, people take it to heart, and it actually plays out as if it truly is strong, long-lasting support. Anyway, the market basically held above for most of the morning session, and it was holding above 41.14, which is where we had some fib resistance, fib support, excuse me. But I continue to believe that the S&P would break 4,100 on its way down to fulfilling all of the moves involved in the intermediate third wave, which began off of this 46.31 high, I think it is. Yeah, 46.31 high. Now, a funny thing happened on the way. It broke, dropped to 40.56. Actually 55. Let me just take another look. I think that might have been wrong. No, 56. It dropped to 40.56 and then rallied back above 4,100, rallied back above 41.50 before it finally closed out the day. As we start the Globex session, it's pretty slow and it's basically down very slightly. Again, from the high, we've gone down, we've gone up, we've come down, we've gone up, and we continue just to play, I think, just now in the wait and see game, because the Fed meeting begins tomorrow and we'll find out what the next rate hike will be, what amount it will be. Will it be 50 basis points? Will it be 75 basis points? Will it be a full point? Yet to be seen. What we do know is that inflation remains a problem. The numbers continue to indicate inflation is real and progressing to higher levels. We know that the interest rates have to go up if we ever stand a chance of getting out in front of inflation and curbing it and slowing it down and turning that tide. Without higher interest rates, there's not a chance that that'll happen. If we cannot get out in front of all of this, we as the consumers and this market are doomed. So this belief of the market holding that and turning itself higher and going back up to 4,500 to 4,600 is not very realistic in my mind. Can it happen? Yes, of course it can. Anything can happen. When we get false narratives or even just bad thoughts into everybody's head, they're going to act on it. They're going to trade on it. And there we go. Now, does it mean that everything's okay? No, absolutely not. It does not mean that. Does it mean that inflation has been cured? Absolutely not. So do I think it's a lasting move? No, I do not. And therefore, I have to believe that the count that we're working with is more representative of what's physically happening in the markets, which is more representative as to what's physically happening in the economy, in the global economies, in the global geopolitical sphere. All of those things are continuing while we believe we have a bullish move building on our hands and that we've seen the lows. Now, to believe that the 10-year note goes from its current position, which it touched above 3% today, that it's going to, those rates are going to drop back to 1%. It's just not in my purview at all. That would be such a huge mistake. Now, whether the market takes it there or not is going to depend on supply and demand and whether people really, they move in as buyers or not, et cetera, et cetera. But to believe that the rate is going to go back to 1% is very unrealistic in my mind. It is truly just signing the death warrant for the United States of America in terms of thinking that we're going to go back into quantitative easing. That's what's got us here. The fact that we ignored it and didn't rein it in is what got this problem. No, equity markets, yeah, you want it back because you want to see Apple go to 400. Well, guess what? I don't think that's going to be possible. So come up with a better reason why Apple's got to go to 400. Come up with a better reason why the market should rally. Why? Because we've had such great earnings season thus far? Nah, I don't think so. So because our Federal Reserve actually does have a grip on inflation? I don't think so. Because the geopolitical situation in the Ukraine versus Russia, hey, under control? I don't think so. That the threat that Russia could just keep on barreling through somewhere is just folly? I don't think so. That the threat of a nuclear strike off the table? I don't think so. And it isn't just what I think. I'm looking out there. I'm seeing what's happening. Has the political situation in the United States evened out a little bit? Have the problems in the different cities and states across our country, have they suddenly disappeared? Has suddenly everybody kind of got to the position where it's like, we all need to work together on this? No, it hasn't. So to believe that we're going to return to a previous state in the market is wishful thinking. Did it stop the buying? No. Will it stop the buying? No. We live in a free society. We can choose and decide to do what we want to do. If you come in and buy the market, yeah, go for it. But no changes here on our daily chart. No changes to the longer, stronger term count. I continue to chart as if we are dropping in an intermediate third wave. The alternate would be that it's an intermediate C wave. We've discussed it before, and that would suggest that this is intermediate A, intermediate B. We're in an intermediate C wave, which should resemble and move exactly like the third wave. And then we're only reaching primary wave A. We've got so many more levels to correct that to believe that we're going to chance that we've got to get ourselves back up to 4,600, I don't understand. I don't understand why someone thinks that we should be moving back in that direction. I don't understand why somebody's going to come up with the reasoning that the 10-year note is going to drop, that the rate will drop to 1%. No, I don't understand how you could come up with that. The technical picture, okay. But the reality, I don't think so. Now, what do I think we're going to get? Let's drop down to that hourly chart. On the hourly chart, it appears that we just completed, I hate to say it, we're subdividing again, and that seems to be what we've done. I continue to say, we're just tracking it down, folks. The market itself is telling us. So could this be the completion point for a sub-minute wave 1? Remember, we've now tracked it down. These are minute waves. This is minute wave 2 of minor wave 3 of intermediate wave 3. So we've already determined that within the minor third wave, again, let me just open this up so we can go back and I can count it out. The minor third wave is progressing beautifully. Minor wave 2 completed at 4509. We touched 4,056. That's 444 S&P points. And we've done that in 2.5 weeks. Actually, 1 week and 1 day. Sorry. That's how much we've dropped. Are we due for a rally? Yeah, I'll give you that. We've come off quite a bit. But to start to think that we're going to take it all back and rally back up, unrealistic. And I don't find any evidence to support it, either through a wave count or just in reality, in terms of cash, in terms of just how the markets are trading and the company's earnings reports are coming out. So what can we be doing here? We are doing a sub-minute wave 2. So once again, it continues to subdivide. And it just continues to show me the power of this third wave and what it ultimately is going to do. Remember, again, I'm going to go out to the daily so we can really see this. Here is intermediate wave 1, intermediate wave 2. Intermediate wave 3 relates to intermediate wave 1. We've already looked at that intermediate wave 3 should end up somewhere down here about 34, say 70 to 80. That is 600, 700 now S&P points away. So then we'll have 1, 2, and 3 under our belts. To think that this completes a correction of a rally that began, the top side, this rally began in 1932. That would be pretty incredible. That we do a super cycle fourth wave correction in 6 months for a rally that took many, many, many years. Even if I bring it down to the cycle level, that cycle wave 5 began off of the 2009 lows. 13 years of advance is going to be corrected on a cycle degree level in 6 months. No, I don't think so. In fact, less. We reached this high on January the 4th. We're in May. In 5 months? 5 months. Oh yeah, we're all done. Took us 13 years to get up there. 5 months, that's all we need. We're done. Just not going to happen. So I think when we kind of put things into the perspective, into the correct picture, we realize, no, it's just a small wave 2 correction. What are the possibilities? Well, I've taken off the downside fibs for right now so that we can take a look at what is the potential for the upside. Well, thus far, it reached 4,056, started to put in a mighty impressive rally. It's wave A. It's wave A of sub-minute wave 2. What's the capabilities? Well, we reached 0.382 at 4150. Next up, well, we got the hourly 50 moving average at 4165. We have fib resistance at 4180. We have additional fib resistance at 4209. And then we get up into it like a little bit of stratosphere in terms of the wave 2, but possible. We have 4230. And then we have the hourly 200 at 4256. That is about the extent of where I think this sub-minute wave 2 should go. Now, again, I have no reason to not believe the count thus far, to not be satisfied with the count thus far. If anything, the waves keep extending lower, not completing and producing huge rallies. In and of itself, the rally off those lows today was impressive, was magnificent to trade, was pretty incredible. But it doesn't suggest that we've got a tone change here, because we have no evidence that it can be supported. We may have traders who emotionally would love to see it, that their positions are begging them to see it. They're long and we need it to go up, but that doesn't mean it's gonna. That doesn't mean that it's sustainable. So back at the ranch, we may have completed wave A of this subminute wave 2. If we did, then we're going to get a B wave pullback. The pullback should find support at 41.39, 41.28, and then 41.14. And maybe even drift back down towards that 4100 level. That would be a little bit deep, but it can. And then put in another leg up. What should that leg look like? Well, I'm going to say if this is going to be like this, probably if I break it down was 5 up. And then we get a little ABC down, either that or we still have one more leg up to complete the A wave. And that might take us all the way up to that 41.65. Then we pull back, same parameters, and then we rally back up and then likely end up towards this upper end of these zones for a subminute wave 2. What can't subminute wave 2 do? It cannot break above 43.03. That's the starting point for wave 1. Wave 2 can't exceed it. If it does, it's not a wave 2. Then we'll be dealing with something totally different. Then we're dealing with the possibility that, hey, we did an ABC down and this longer term count is off. And if that's the case, then yes, we can go up much higher. But that's going to be going on the basis that something out there has got to be resolved. Interest rates, inflation, political problems around the globe, the recessionary pressure that is hitting the globe, the inflationary pressure that's hitting the globe via the commodity prices, via just everything. That all has to change if indeed we're going to start rallying up. Otherwise, it's going to be the biggest B wave that we've ever seen outside of the one that we saw in 2009. That B wave took the Dow to new highs all by itself. And then we saw a humongous collapse. Could that happen again? Absolutely. Absolutely. I would prefer the slow and steady rather than the crash. But sometimes that's exactly the position that the markets and the traders put us in. There's no other choice, but we just crash. Now, for tomorrow, I think that we actually can pull back in a B wave. Those are the parameters, 41.14, maybe a little bit below it. But I think we hold up above that 4100 level, and then we rally again in a C wave. C has a lot of potential. We can get us above 4165, 4180, 4209, 4230, possibly even up to that hourly 200 at 4256. What comes after that is going to be crash-like. We keep putting it off. We keep fighting so that it doesn't happen. We may have no choice. And then again, we might come in on Wednesday, they raise it, they only raise it another quarter, or they raise it to 50 and everybody's peeing in their pants like, Yahoo! I don't know why, other than their positions are speaking and they're long and they need it to go up. I don't know. Basically, I don't even really care. No matter what this market does, I will trade it. Please understand how I start all of these. What a great trading day it was today. Volatility provided strong moves in both directions, up and down. Here's where we started. We went up, we came down, we went down, 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 and then wham. Solid move, solid move, solid move. This one a little iffy because it was the opening, but solid moves up, solid move back down. That's an hourly bar. That's an hourly bar. I didn't go straight up, but pretty much. So yes, trade what's in front of you. Trade according to the moving averages. Play along. I don't care why it goes up. I don't care why it goes down. But if you're going to tell me we're going way up, please be able to support it realistically and not just like, well, cause that doesn't work. So for tomorrow, I am looking for some type of a pullback in the form of a B wave, and then we get a C wave up, and then we'll see what happens after that. All right, I'm going to leave it right there. Our next update will be on Tuesday, May the 3rd.